I'm Ian McIntosh. I'm Managing Director of Strategic Offshore Research in Aberdeen.
You presented today at the Offshore Support Journal Subsea conference. Could you give a little bit of detail on what your presentation was all about and how you find the market?
So we're closely presenting the demand-supply balance of the whole subsea support vessel market at the moment. We're in a market situation where demand has increased, supply has reduced, and we've got a market that's rapidly tightening its rates, heightening expectations from the vessel owners and contractors heavily as well. But it's a unique cycle. The market's really heating up, and normally at this point in the cycle that's rising, you would have lots of new build ships being ordered, which would eventually swamp the market. At this cycle, we've barely got any new buildings. So it means the market feels a bit more protected than it would be normally in a rising market. Because there's no additional tonnage being there, it gives more power to the existing vessels and contractors. The market should stay tighter for longer. Prices should get higher and stay up as well because of that. You also don't have any disruptive players in the market for ROV support or diving work. You do in some of the ROV side market, the autonomous side of the market, but you don't have a new construction player that's emerged trying to compete with a Subsea 7 or a Technip FMC or Buscalis. You just don't have a new private equity-backed contractor trying to enter the market, which again means that prices can stay higher. You haven't got like somebody that's trying to buy market share in the current market because it's very consolidated and very tightly controlled.
And what is driving the demand side?
So partly is for new field development work, which is heavily in Norway, heavily in Brazil, West Africa, Southeast Asia, not so much in the UK at the moment. So that creates lots of vessel demand, and lots of long-term vessel demand, especially in Brazil. You're also seeing a much increased level of decommissioning in the North Sea in the UK, which is very vessel intensive. A diving ship can go to one of those jobs and stay there the whole year. You're also seeing a bit more inspection work, repair work as well, catching up on things that were not done when the market was down, realizing that installations are going to produce for much, much longer in light of a higher commodity price, in light of energy security as well. So both the construction, production side of the market, but decommissioning is the extra factor that's been added on there as well, which can, like I say, be very vessel intensive.
Why haven't we seen new builds come into the markets in the last 5 to 7 years?
Market's been through a very heavy oversupply phase, which means that vessel owners and contractors had their fingers burned. So they've learned the hard way that too many vessels equals a bad market, bad rates, bad trading conditions. But it's also scared a lot of the financing sources off either offshore oil and gas or shipping markets, because they all came into the market, discovered how much of a boom and bust cycle it could be, and now they're much more reluctant to invest in shipping in general. ESG issues as well, trying to convince a bank to finance a project that's a ship that's just purely for oil and gas is pretty difficult, because the mood music is not that oil and gas is the best place to be. So you can easily get the financing, relatively easily get financing for something on the renewable side, the wind farm side, but oil and gas side, a lot more tricky, unless you can somehow prove it could work in different work modes, which, $200 million diving vessel ship is not ever going to work in a wind farm. It's not ever going to have a function that suits it in that. So it's the lack of finance that is there, and also deliberate control of the market. Fleet management makes the market stronger. All the contractors have scrapped vessels, moved tonnage from the market, and they're not going to easily give away the market tightness by overbuilding again. They've learned the lesson.
And how long do you think this cycle can continue at this sort of pace?
Well, it's certainly 5 to 10 years. Beyond that, it's very hard to tell, because what is oil and gas's position in the longer term in terms of politics, what public perception would be. So the need and demand is still there, but how that fits in world politics or what populations want at that point is more difficult. But the demand for the energy is there. Oil and gas demand is still increasing every year. So realistically, I think it's at least there for 20, 25 years, but it may be you have to deal with different issues in 10 years' time, by the time that you've got different pressures on CO2 emissions or being less carbon intensive. maybe that produces some different factors in the market, how it has to react to it.
Okay. And what are you getting from being here at the Offshore Support Journal Subsea conference? What are the big takeaways?
Very good networking opportunity. Get to see lots of clients you wouldn't normally get to see from all around the world. Can also see quite a lot of the tone of the market, and that things are a lot more positive. You can see we've had Fernley's addressing what might some of the new financing sources might be in the market, which is interesting to see. And it's good to see the new technology as well, which can change the market, can stimulate the market sometimes too.